Hey everyone, it's Patrick Ceresna here from Macro Voices. Kevin Muir and myself have put together a new show called The Market Huddle. This is an excerpt of the top 5 things to watch next week. If you enjoy and want to watch the full episode, just on YouTube, look up Market Huddle and enjoy.
Let's move on to the top 5 things to watch next week. Number 5 is something near and dear to your heart. Patrick, why don't you tell us about it?
Listen, I'm a dollar bull. Now, just to kind of emphasize, while I am bullish on the dollar, I believe that there's going to be a major shift in currency trends at some point this calendar year. So I don't want to be misinterpreted. I have the flexibility of flipping short at some point, but I remain in the U.S. dollar bull camp for at least the first quarter into the second quarter of the year. At least that's where I stand. I reserve the right to change my mind on the open air, but the euro popped, and it popped to a higher high, and I was immediately thinking prairie dog, because we've introduced all of our listeners to this term.
Yeah,
and
the noble animal. He's a noble animal, the prairie dog. Don't ever forget that.
For peggers like you, this is a really important animal. And the point is, I was really suspect that it was an opportunity to fade it off of there, and my view is that Europe is slowing. Like, how do you justify a euro trading at 120, 125 with the current economic circumstance? I could see if shit started hitting the fan in the U.S. and certain types of other issues started happening, that there could be other circumstances that on a macro scale make the euro attractive. But under the current macro landscape, how could you justify a sustained rally in the euro in light of what's happening across, like, well, obviously France on a political level, but the slowdown in Germany, what's happening in Italy, the whole mess of the Brexit. Obviously, that includes the pound sterling in that mix there. But I don't know. I just think that any rallies in the euro it's a high interest to me to fade rallies.
I hear you. Just be careful, because
what's your thinking?
Don't forget that Japan, and I know that Japan's different. It's a current account surplus country, and there's lots of reasons why Japan, when they had the nuclear fallout, that the yen rallied. So I get it. This is not apples to apples, and that you can't go and say because this happened in Japan, this is going to happen in Europe. But don't forget that in Japan, when they had that tsunami disaster with the nuclear, accident, the Japanese yen rallied hard. So,
but they don't. What kind of a disaster is that? Like, a political movement like what's happening in Europe is not about having to move to inspire a movement of capital to repatriate or something like this. I don't think that's apples to apples.
Yeah, no, I completely agree. I'm just saying that the markets can do funny things.
Of course,
and you got to be really
that.
kind of on the watch out for things. When something happens that you can't explain, it's almost like you should perk yourself up and go, hey, what's going on there? And one of the things...
So are you going to take the other side of the trade?
No, I'm not. I think that...
words of caution for our listeners.
Yeah, I just think that one of the things to think about is if everybody's already stuffed to the gills with U.S. dollars, which is one of my theories, okay? All it's going to take is bad news in U.S. and people will go back to their benchmarks. And even though things are really bad in Europe, it might still cause the euro to rally. And that's kind of my only thinking, that it doesn't...
you know what, listen, I can't say that it's impossible for you to be wrong, at least on that kind of a theory idea. My narrative is that the global economy is going to be slowing and falling into an economic recession a lot faster than the U.S. So I actually So under the theory that, let's say, everything is improving abroad and the U.S. is becomes the problem, then I would subscribe to your view. But I just don't think that that's going to be the case. But listen, that's what makes a market, right?
You're absolutely right. And I'm not, just so you get it straight, I am not saying the euro is a great buy-in here. I can understand how I can envision a scenario where it actually rallies.
All right, so Kev, number 4.
So there's a ton of U.S. economic data next week, PPI, a million stuff. And I think it's increasingly important to watch economic data and to see if it's going to justify the idea that the U.S. is slowing and the economy is rolling over.
I don't think it will.
And here's the thought for you. I think that strong economic data is negative for risk assets.
Of course, I think you've mentioned that on the previous show, and I have to agree. But you know what's
that's like
interesting
the
is
kiss
that
of death, man. When you agree,
but
with me.
no. But listen, let's be realistic. The kiss of death was on that jobs number because everyone was thinking it was going to sell on it. Instead, Powell opened his mouth and the market rallied. Right.
Well, yeah.
But
one of the greatest flip flops of all time, by the way, Powell.
One of the greatest, and just to throw egg on the face of all these market huddle guys that go onto this show.
He just panicked and why don't we just talk about this for one quick second? I think that he had gone through so much pain to get to that point, meaning that he had appeared tone deaf to the market. And he was just at the point where where the market was settling down, and then he flip-flops. So either he doesn't know what he's doing and he's just kind of wandering around with like a blindfold on, like Bird Box or whatever, or he's just I don't even know what to say, because I was just like, why, dude? Why? If you were going to panic, you should have panicked so much earlier, and or you just hang tough because you're almost through it. And that's my big kind of takeaway from this flip-flopping, or the cave-a-thon as they talk about it in terms of with Powell.
So my just last thing, because I want to move on to number 3. I just think that while I believe that there's a good chance that the economic slowdown will happen this year, I think the first quarter, the economic data is still relatively strong. I don't think that we see some sort of really negative U.S. data yet. Maybe we'll see.
And that'll make a fool out of Powell even more, and it'll make his flip-flopping seem even worse. Well,
let's move on to number 3. What's our thinking here?
Well, will this U.S. shutdown end? And, we're Canadian, and we don't, shut our government down for most, we're kind of still. We
only shut down our government if the snow is 3 or 4 feet high, and then no one can actually get to work, right?
My poor wife was actually telling me, she says, I'm really worried about this U.S. shutdown. It seems kind of... It seems worrisome, and I said, "Well, they do it all the time. I don't really."
This is the annual shutdown.
That's right. So, will it end, and whether it means something, I don't know. I did see that
I think that Trump builds the wall with his executive powers, and then calls for an end to the shutdown. I think so.
I just don't even know if it means anything. Eventually, I guess the markets will start to worry about it. So far, they haven't. A lot of the economists tell me that it doesn't matter. The shutdowns cause very little actual economic slowdown. The fact that they're telling me not to worry about it almost makes me worry about it more. I don't know what to tell you. I don't actually even have any insights, except that I sure hope it ends for all those poor people that aren't going to get paid. For sure. And it just kind of confuses us.
Yeah. So number 2, earnings season. It's here.
It's here. 36 S&P 500 companies next week.
And the bar is nice and low because the downgrades have been rolling in. What do you think?
Is that what you think? You think that they've actually that we're low? Like that this is gonna surprise?
Well, I mean, everyone. Well, listen, when everyone is already before the earnings come out, already lowering the bar, it's easier to jump the hurdle. I'm not saying that I think they'll be. You know what I mean? Like when these analysts are all lowering expectations, I think it's easier for us to hear a lot more headlines that the company met or beat the expectations, right? I mean,
well, what'll be interesting is if they meet or beat expectations, then they still sell them.
Well, that would be something, wouldn't it?
Yeah.
I mean, that's really the thing to watch, isn't it? What I always love is it's not whether they beat the number or not. It's always about how the market reacts to the stock. And what will be interesting is that there will be a good solid wave of companies that will come out and beat. There will be, a certain percentage always do. will those stocks kind of blast off and take off to the races, or will they pop and then the sellers will fade them? Will that it'll be so interesting to see whether that pattern emerges. The only way to find out is by observing, right?
Yeah, well, I'm a big believer that liquidity rules all, and I think liquidity is being drained from the system. So I feel like it's, what's that old saying about analysts? Bull markets, who needs them? Bear markets, who can afford them? I just, to me, that's liquidity trumps everything, and that's what will dictate if the market heads higher or lower from here, not earnings.
Sure. So what's number one, Kev?
Well, is this rally and risk for real? And I just
that's 2 weeks in a row because we talked about junk.
But
right?
it's
Hey, it has to be talked about.
Yeah,
it's amazing to see the type of move that we've seen here.
Well,
is there a particular market that you're watching?
Well, for me, I still think the canary in the coal mine is the leverage loan market. And I pull up that BAKLN, and it had a big bounce from the lows. Can you pull up the chart for us all?
Yeah, I'm going to pull it up right here.
It had a big bounce from the lows, but if you look, it's this past week, it's been sucking wind. And it kind of gives me pause.
That squeeze happened in every risk market, and it's pausing here. Yeah. So for our listeners that mostly just follow stocks as opposed to all the different credit markets, is there? I mean, are you watching like small caps over that, or a particular sector that you think is running hot that is going to be like a canary that you're watching?
The small caps have been running, but I think that unfortunately they've been distorted, and I think that credit is more like look at the number of green bars in there, like even
looks much better than the Euro stock 50.
I would say, but I look at those leverage loans, and to me, let's step back and think about what's driven the market for the last kind of year or two. It's been buybacks, and I think with credit not doing well, it's going to be more and more difficult for the buybacks to, that financial arbitrage between companies issuing debt and buying back stocks is going to disappear. And I think it's that simple. And you're going to get.
Have you had a chance to listen to the Chris Cole interview we had on Macro Voices just yesterday?
You're calling me out in front of everybody. No, I haven't.
I am. Well, listen, I mean, it's only been out for 24 hours. I had the privilege of listening to it at the time of recording, right? So I'm not trying to call you out, but like it was very much in line with your thinking. I think
he's a smart man, that Chris Cole.
He is a very smart man. So, it was a great one. So have a listen and hear what he has to say. I mean, we could talk about it in the coming weeks.
But to me, watch the BKLN. I think until that thing can rally, and that thing should be doing better. It's leverage loans. They should be doing better. There should be no reason why they shouldn't be rallying with everything else. And the fact that they're not is worrisome to me.
All right. Well, listen, that was your top 5 things to watch this week. And so let's move on to words of wisdom, your parting words of wisdom. What's on your mind?
Well, from the late Marty Zweig, and he says, it's okay to be wrong.
Wait, hold on a second. He passed away?
Yeah. Boy, you're just filled with smoothness today, Patrick. Yeah.
Okay, edit out here.
No, don't edit out. Leave it in. Patrick, leave this part in. Don't edit out. For those that don't know, Marty Zweig did pass away. Let me just double check before I February of 2013. He passed away.
Oh, it's been that long, eh?
Yeah. Anyways, let's go back to his parting wisdom. It's okay to be wrong. It's unforgivable to stay wrong. And actually, I thought about you when I heard this, because I must say, one of the things that I admire most about your trading is your flexibility. You don't sit there with a view and just, dig your heels in, and you're probably even better than me in terms of flipping and going the other way. And maybe it's the squiggles. Maybe it's just you're smarter than me. But I think that Marty Zweig had it bang on, spot on correct when he says it's unforgivable to stay wrong. And when the market's fighting you, last thing you should be doing is fighting the market too much.
It's so important to have the mental flexibility to realize that your narrative isn't working And then you have to have the ability to kind of say, well, if it's not what's happening, then something different. What is it? You have to have the flexibility. And what the biggest mistake the average retail investor does is they believe that they have to hold something until it comes back to break even, and it's a very retail trap.
Well, and forget about retail only, because institutional investors and strategists do it.
Sure.
They feel that they've made a comment and they go, oh, I'm really bearish on the US dollar, and then something changes and they don't have the balls to like say I was wrong. And like shit, yes. I get stuff wrong all the time. And what am I supposed to do? Continually defend a position that, you know, I made my best decision at the time. It was wrong, and now I'm changing my facts. Like, what does Keynes say? The facts change. I change my mind. What do you do? And to me, that's the essence of what Marty Zweig is talking about here.
Yeah, and so definitely very valuable words of wisdom.
Yeah,
so let's move on.
So Patrick, what do you think about our Wellington Brewery Upside IPA?
I actually finished it halfway through the show, and I've been itching to go grab. I'm itching to go grab another one, and I've been stuck at this computer.
So I didn't actually taste the grapefruit and all the other crap that they heard, like that they listed. To me, it was just
I think they just do that to make sure that the hipsters
that's right
buy it.
I'm going to tell one quick story before I went out. I had this. I met this fellow, and he's a portfolio manager for a hedge fund, and he's kind of a hipster. He's got like the man bun and the whole 9 yards. And he took me out to a bar, and he said, you know, are you into craft beers? And I said to myself, well, not really. I don't really seem to like them, but you know, why don't we give this a whirl? You can I'm going to let you pick some beers for me. So he started off with a sour, which was just god awful.
I can't wait till one of our sponsors sends us one of those sours.
Yeah. Oh. So the sour, which is just god awful. Then we went on to something that was like tastes like coffee.
See, you're spoiling this because what's going to happen here for sure is that we're now going to get these types of beers in the next couple of weeks, and now you're kind of gonna already ruining the reactions that were for certain going to be.
I don't understand these millennials with this, because he says it's really hip, like the sours are all the rage. These millennials, and I couldn't drink it. It was undrinkable. If you're listening, you know who you are, and you know what? I'm sorry. I can't bring myself to drink a sour. And then we drank something else, and then it just kept getting worse and worse and worse. And I've learned my lesson. No, I do not like going and experimenting with craft beers.
All right. Well, let's wrap up the show here, Kev.
Okay. Thank you for spending some time with us. Please visit our site at markethuddle.com to sign up to receive our weekly email that will include a link to the show and the charts that we discuss. Rest assured, we will never clog your email with junk, and we will only send you our weekly letter and updates for our upcoming shows.
And also, please follow us on Twitter at The Market Huddle. Also, you can follow Kevin at Kevin Muir. It's just at Kevin Muir, right?
That's correct.
Yeah. It's at Kevin Muir, and myself at Patrick Ceresna. Also, if you're watching this on YouTube, click on the subscribe button to make sure that you know when all our upcoming videos are. As well, if you're listening to this as a podcast and you're enjoying it, make sure you go on to the iTunes or wherever it is and leave some comments and feedback on the show. Well, that's only if it's good comments.
That's right. If you don't like it, just don't bother.
Yeah, don't bother. Just finish. But actually, if you made it to this far into the show, you probably are enjoying it. So you would have ended this show a long time ago. Anyway, thanks for listening to the podcast. If you'd like to view the charts and so on, go to the website. Thank you for joining us, and have a great weekend.
See you next week.